Hey everyone, I'm Darcy. Picture this scenario. It's midnight and you need to send $10,000 to your friend in the US. Banks are closed, traditional wire transfers take 3 to 5 days, and fees will cost you hundreds of dollars. But what if I told you there's a way to complete that transfer in 5 seconds for less than $1 in fees, and it works 24/7, 365 days a year? This isn't science fiction. This is happening right now. In 2024, there's a financial instrument you've probably never heard of that processes more transaction volume than Visa and Mastercard combined. This tool is called stablecoins, and it's quietly rewriting the rules of global finance. Today, I'm going to spend 20 minutes helping you completely understand this technological revolution that could change your future. Last year, my friend Jake was running a cross-border e-commerce business, importing from China and selling in the US. Every payment collection used to be a nightmare. After customers paid, money would travel through banking systems for 5 to 7 days. Currency fluctuations meant $1 million sent could become $950,000 received. Bank fees would eat up thousands per transaction. During holidays, money would just hang in limbo. But now, Jake tells me he receives over $5 million in stablecoins monthly, arriving instantly with virtually zero fees. The secret behind this? Stablecoins. Stablecoins are simply digitized dollars. Imagine you have a $100 bill in your hand. Now I use special technology to digitize it, turning it into 100 digital tokens. These tokens are price stable, always equal to $1. Globally transferable with no border restrictions, instant settlement with 24/7 transfers anytime, and transparent. Every transaction is trackable. This is the core logic of stablecoins. Let me give you 3 key numbers that will shock you. First number, $250 billion. This is the current total market cap of global stablecoins, equivalent to Singapore's annual GDP. Second number, $27.6 trillion. This is stablecoin transaction volume in 2024, 10% higher than Visa and Mastercard combined. Third number, $2 trillion. Professional institutions predict stablecoin market cap will reach this stunning figure by 2028. But behind these numbers, what's more important is understanding what problems they're solving. Have you ever tried sending money overseas? Let me break down the costs. Traditional bank transfers. Time 3 to 5 business days. Fees $50 to $200. Exchange rate loss 1 to 3%. Operating hours only during bank hours. Stablecoin transfers. Time 1 to 10 minutes. Fees $1 to $10. Exchange rate loss nearly zero. Operating hours 24/7, 365 days. This is why even small merchants in places like Yiwu are starting to accept stablecoin payments. Let me tell you an even more shocking story. In Argentina, inflation once exceeded 100%. What does that mean? 100 pesos in your hand today would only be worth 50 pesos a year later. But the Argentine government also restricts citizens from exchanging for US dollars. What to do? Smart Argentinians discovered USDT stablecoins. As soon as they get paid, they immediately convert to USDT for value preservation. Now, Argentina is one of the countries with the highest stablecoin usage rates globally. This isn't speculation. This is survival. If you've ever bought Bitcoin, you've definitely experienced this thrill. $100,000 when you bought in the morning, $90,000 when you checked at noon, $110,000 by evening, $80,000 the next day. This volatility makes Bitcoin impractical as a daily payment tool. Who wants to buy coffee with something worth $10,000 today that might be worth $8,000 tomorrow? Stablecoins perfectly solve this problem. Minimal volatility while retaining all the technical advantages of cryptocurrencies. August 1st, 2025. A day for the history books. Hong Kong officially implemented the world's first comprehensive stablecoin regulatory framework. What does this mean? Before, stablecoins existed in a gray area. Nobody knew if they were legal or not. Now, there's a clear legal framework, like giving stablecoins an identity card. Hong Kong Monetary Authority CEO Eddie Yue made it clear the threshold will be high and only a small number of licenses will be issued initially. But the signal is significant. One of the world's most important financial centers has officially recognized the value of stablecoins. Even more interesting is the United States. Trump once called Bitcoin a scam, but now he's not only issued his own stablecoin, but also signed executive orders to establish strategic Bitcoin reserves. The Genius Act passed by the U.S. Senate isn't meant to suppress stablecoins, but rather to bring 99% of global stablecoins under U.S. regulatory oversight. Why? The answer is simple. America has discovered that stablecoins are an excellent tool for strengthening dollar hegemony. The EU's MiCA regulation is already in effect, and Singapore, UAE, and the UK are all racing to establish stablecoin regulations. Over 20 countries globally are simultaneously advancing stablecoin legislation. This is extremely rare in financial history. What does this tell us? Stablecoins aren't a flash in the pan, but a major upgrade to financial infrastructure. But though called stable, stablecoins don't mean zero risk. I must tell you about several real cases that happened. Case 1. Silicon Valley Bank event. In March 2023, Silicon Valley Bank collapsed, and Circle had $3.3 billion deposited there. The result? USDC instantly dropped to 88 cents, triggering panic selling. Fortunately, the Federal Reserve's emergency intervention prevented a larger crisis. Case 2. Terra collapse. In 2022, algorithmic stablecoin Terra USD plummeted 99% overnight, causing 400,000 investors to lose everything, over $45 billion in losses. Case 3. Frequent scams. Just last year, a platform called Jia used stablecoin investment schemes to steal 13 billion RMB from over 2 million investors. Stablecoins have 3 core risks. Risk 1. Issuer default. Stablecoins are essentially an issuer's promise. Give me $1, I'll give you 1 coin, redeemable anytime. But what if the issuer runs away? Your coins become worthless paper. Risk 2. Reserve asset risk. Stablecoin value depends on underlying reserve assets. If reserve assets have problems, so do stablecoins. Risk 3. Regulatory risk. National regulatory policies are still evolving, creating significant policy risks. How to identify scams? Remember these red flags. First, promises of high returns. Real stablecoins don't promise high yields. Second, no transparent audits. Legitimate stablecoins regularly publish reserve reports. Third, anonymous teams. Would you trust a team that won't show their faces? Fourth, excessive marketing. Real technological innovation doesn't need overwhelming advertising. Let me show you 3 irreversible trends. Trend 1. Traditional financial institutions entering. BlackRock, JP Morgan Chase, Visa, PayPal. One financial giant after another is laying out stablecoin strategies. When traditional finance big brothers take it seriously, can you still call it a bubble? Trend 2. Central bank digital currencies, CBDCs, and stablecoins coexisting. Many worry CBDCs will replace stablecoins, but I believe they'll coexist. CBDCs government-led for domestic payments, stablecoins market-led for cross-border payments and innovative applications. Trend 3. From payment tools to financial infrastructure. Stablecoins are evolving from simple payment tools into the foundation of the entire digital financial ecosystem. DeFi, NFTs, Web3. All these innovations depend on stablecoins. I won't tell you to trade coins because that's not where stablecoin value lies. The real opportunity is understanding and participating in this financial infrastructure upgrade. For individuals, learn new payment methods, experience more efficient cross-border transfers, participate in the globalized digital economy. For businesses, reduce cross-border payment costs, improve capital turnover efficiency, expand into global markets. For investors, focus on related industry chain companies, participate in infrastructure construction, capitalize on technological revolution dividends. Friends, stablecoins aren't a panacea or a get-rich-quick scheme. They're just a tool, one that could make our lives more convenient and global trade more efficient. My recommendations. First, learn first, participate later. Understand the principles deeply, don't follow blindly. Second, small amounts for experience. Be cautious with large amounts. Use small money to experience the technology. Be extra careful with big money. Third, choose compliant platforms. Only use platforms and products with proper licenses. Fourth, long-term perspective. This is a technological revolution, not short-term speculation. Fifth, risk responsibility. All investments carry risks, including stablecoins. Finally, I want to say, stablecoins represent not just a new payment method, but an important node in the evolution of humanity's financial system. They might not make you rich overnight, but they could quietly change how you live in the future. Stay curious, stay rational, Embrace change. The future has arrived. Are you ready? If this video helped you, please like and subscribe. I'll continue sharing more cutting-edge fintech deep dives. See you next time.